Good afternoon. Welcome to Options Tender. Just wanted to do a intraday video to kind of more of a learning video as we wait for GDP. No, I'm sorry. As we wait for PCE tomorrow, it seems that we're going to get an inside Harami day, which could be a bearish setup. It also could be a follow through to the upside. So if we break down underneath yesterday's lows, then we should have a follow through tomorrow as a bearish Harami setup. And but I'm not going to show you that on the daily time frame. I'm just going to stick to the 65 and just show you what kind of setup I have. And there's a couple other screens. I work with 3 screens, and I'll show you what's on those other ones during my day setup. Okay. So if you're new here, go down to that bottom right hand corner, hit that Options Center logo and subscribe. Don't forget to like the video. It's been super helpful. Thank you so much, everybody that's been supporting. This channel has been accelerating, and we're trying to get this information out to as many people as possible. So here we go. We're going to jump into it. I was talking on the Discord about breadth. So I wasn't talking about all of this in particular. I use the ADSPD. That's the advanced decline for the S&P. So kind of gives us the breadth for the day. How strong is this market? And, likely if it's in chop zone or if it's going to be trending up or down. Now, there's this ADD that I've never used before, and somebody else was using this. So as far as I can look up, I've looked up definitions and things like that on the internet, and I don't see any difference, but I'm curious how the calculation, so I still have to work on that, see how the calculation here, this S&P 500, we have 500 stocks in the S&P, and so if all 500 are advancing, you'll see a 500, I think it's actually 501 or 502 because of Google, split stock, stuff like that. So, but if you see all of them, then it will be 500 or 502, whatever the number is. And exact opposite for the negative. You don't see those readings too often, but like yesterday, we ended off the day at a negative 460, I believe. And then today we started off the day just ramping up in the 460 area as well. So those are super bullish, but we started to see it fade. And so that was a caveat of watching this from almost, near 500 on the positive side and kind of fading down at that point. So we could see the market was weakening, and that wasn't such a huge advance that we were thinking was going to happen. Okay, so I'm not going to spend. I do have a video on breadth, and so I'll put that above and on the end of this video. So we're not going to go through all of these, but these are the ones that I look at. The put to call ratios from the SIBO, the put to call ratio for the S&P 500, from the options market. There's several different ones here. And these are all put to call ratios. So they all have kind of their own little nuance to them. We have trend. So trend is volume based. And we have that indicator on at all times to see, what's going on in the New York Stock Exchange between advancing volumes as opposed to declining volumes. And that's our advanced decline for the S&P. We have the ticks. Ticks as well. We also keep the ticks at the bottom of this screen to show the different advancing for the NYC as well. Okay, the NASDAQ advanced decline. Here's another NYC advanced decline. VOLD, and I just added on, no pun intended, the ADD. So those are some things to look up, and maybe you want to mimic some of the things that are on my screen. And then this is my market analysis tool here, which gives me all the different indices and some influencers on the market. So if we have Bitcoin, the dollar, this is all futures here. These are the cash indexes futures for VIX. And these items affect the market. So we have rates, 10-year rates here, bonds, 2-year bonds. We have 20-year and 2-year bonds. Gold, silver, overnight Nikkei. We have the DAX. Somehow the DAX has fell off of here. I'll get that back on. But oil. And then we have skew to see if people are putting on out of the money protection. We have the different VIXs. We have the VVIX, which is the VIX of the VIX. VIX of the NASDAQ, the short-term VIX, and this is the all-popular VIX here, 30-day VIX. Now, also, I like to watch mega cap stock tech because it's so important to keep an eye on these. So that's why these are all on the screen. Some people call them the Magnificent Seven. In the past, they were, different acronyms for them. But so I like to have these on here to see if there's a mixed market. Apple can hold down the market in itself. So you get Apple paired with Microsoft, for example, and you could have a down market with positive breadth. So those are, if your breadth is good, you should expect the market to be on the rise, with the caveat of if you have Tesla tanking and your breadth is good, it could still bring the market down. So that's why I look at those. And then we have our SPY and QQQ, along with BITO, which is the ETF. These are all ETFs. That's the ETF of Bitcoin. And then I have much, much more that throughout time I can look through as the market's going. So I keep an eye on all these, not as much. These are the major ones that I keep on screen at all times. And so moving over to the technical analysis here, I have on screen the SPX. On this one, I can use SPY, or I scroll around the different ones using this, for example. So I'm going to close this up so we can see this a little bit better. And as you can see, our trend line, we broke down from the major trend line. But I do know that there's some counts on here that say this is just another wave 4, and that we go for all-time highs, perhaps, in another move. Now, we have that catalyst tomorrow. So, yes, I am short the market, but I'll show you a couple different indicators as I go through here, why I put on some call protection in the very near term for tomorrow, while all of my puts are into next week now and beyond, up to about a month. So I wanted to make sure I protected those for any up moves. But our target's down here. We explained that in yesterday's video, so that'd be a good video for you to check out. Again, I'll put that at the end. This will be our target area. That's the back test and of the flag, or the channel that we broke out of on SPX here. I showed you SPY, I believe, yesterday, but this would be a different point of view. I like to use all of them. And so the screen area would be that 62 to 78% retracement of this entire move here. So if we start moving from the catalyst, the PC, before the market starts, then before market open, then we could see easily the next few weeks get down to this price here going into January. And that's when we'll be looking for some sort of major bounce. We break down from this area and it's good night, but we'll be looking at some sort of bounce at minimum for our primary situation, our primary projection, and then sell into that bounce. Now, this also sets up perhaps a 1-2, and so we have to keep in mind that price may continue to the upside. That would be the bullish alternative situation. I'm not part of that camp, but we're just, the whole point is we're looking for a top within this January to March area for the Fed pivot. We don't have to make it all the way out to March in order to, if the Fed pivots in March, the market could already be moving to the downside at that point. Okay, so why did I put on call protection? Well, we have the MACD starting to head down. So yes, that's a bearish signal there. Let me pull in a little closer here. Bearish signal, but we're getting into that zero zone here. So that's a good place for the market to bounce. We got there rapidly yesterday within about 2 hours. And so this market could simply bounce and make a lower high if we start making new highs here. Now we could get divergence, or we simply just are testing the blue MACD line, sort of catch up to the yellow line, and we head lower from there. Now, the kind of, I guess, best way to say that is the yellow light on all of our shorts was that the RSI went completely oversold immediately yesterday. And so that's a sign saying, hey, you might want to either lighten up or put on some protection. We're oversold. Now, it could stay that way, but it just didn't appear that was happening today. And I'll show you why in the ticks. But same thing, getting the slow stow, started heading down rapidly, and we crossed back over to the upside. So we're looking for either just a little bit higher pullback, because we only made it to the 50% retracement of this initial move. It looks impulsive, but we can't see exactly if there's 5 waves in there, because it's even if we go down to the 5 minute, it gets really difficult. So it looks like an impulsive move, and it's very normal to not only back test this trend line, which it did, but also go to the 50-60% retracement, even up to the 78. So we still could do that into tomorrow and then start to reverse. But remember, seasonality for the week is, if we're bullish tomorrow, if we end off with a bullish day, then kind of expect that we're going to remain bullish into Monday, which would be a good teller. If we're bullish tomorrow and we start to head to the highs, Monday should probably continue upward as well. So keep that in mind as seasonality. It's think of seasonality as the wind. If you're sailing, there's a wind behind your back, or is it against you? It doesn't mean that the market can't do something else. It just means that if the market's bullish and it's on Friday, that sail is with you, and that Monday is likely to follow through as well. Okay, now also looking at the ticks here, started off extremely strong with the day and started to fade. So that was a good cue to me that we thought we were going to reverse, and we did. So we saw the market reverse and we started heading lower, but it really didn't get much out of the chop zone here. Okay, you have the bullish zone up top, and you have the bearish zone on the bottom. We really were not getting out. So this kind of said we're in a choppy sideways day. That's the personality it was giving to me. I wasn't sure until we started catching a little divergence here, and then we did see another move down. Could we end lower? Sure. Yeah. So I'm just looking at this, a 5 minute time frame. What could happen is that this was all a sharp move for a 5-wave move down, in that we already retraced, and this could be another 1, 2. This could be a 1, 2, 3, 4, 5 wave move down, and now we're just retracing that. So that would be a 1, 2, 1, 2 setup going into a catalyst tomorrow as with a inside day, a bearish Harami reversal setup that this market could really get hit tomorrow. Okay, so I like to see the ticks here to see what kind of characteristic the day is having. You see these large volatile moves was confirming the large volatile move towards the end of the day yesterday, while it didn't have that price action going into it. We were kind of floating to the upside before. Now with the also the ADD, I added this on since we had the indicator that I was adding. I'm just kind of playing with it, and we see the ADD kind of fading, but it's still in positive area. So just don't see the market really falling off a cliff in this. We see the ticks and ADD follow, but I want to keep this on screen now. It's just something I updated. If you've been following me for a while, this you would not have seen this on there. So those are what I want to show you there. I have a couple other screens. I use 2 different screens here, so let me pull up the other ones. This one would be on a different screen. I like to have the 65-minute. I actually, none of this was saved, and so I re-engineered this, but I like to keep the SPY on the Elliott wave, on my Elliott wave picture, so I can see that point of view, because I am expecting a retracement, and this is that zone I was talking about on that 62% to 58, and you always seem to get a reaction off the 50% as well, so you like to take profits and add on protection into those sorts of moves here. So when I'm, this is a good time to say that when I'm bearish in a video and I'm telling you the direction that I think that the market's going, that's not exactly how I trade specifically. You got to protect your money. Money management is a whole different ball game. So, when I'm wrong in a move, hopefully you have protection because you see another alternative situation that could play out. And so that's very important with managing your money. But here's another point of view. The SPY, we broke down from the major trend line. I counted it as this being complete. There still is a possibility that we get one more high. So I want to protect against that. But we'll be looking to load back in if we go higher. And because all those divergences are still into play. But here, that's a green zone that we're going to get some sort of bounce, some sort of reaction when we do get our pullback. So I do think it's going to be a nice steep pullback. We have a wedge. We have a wedge that we broke out of. It's a little bit different than the SPX point of view. And then we have this possible trend line that's headed up from the lows. That should hold price as well, at least for a bounce. And then we're looking for a sell into it. So the Qs, same thing. This is our regular technical analysis, our traditional technical analysis with our gaps and our trend lines, all sorts of stuff with our moving averages. And then this is the Elliott wave. I'm actually going to remove the moving averages from the Elliott wave. I don't want that to interfere with my judgment when you're looking on this screen. It simply levels with the with ratios, time ratios, and retracements and extensions. All of those sort of voodoo-ish type of ways of using technical analysis and Fibonacci's and symmetry and things like that. So I keep IWM, just an eye on that, and I like to keep an eye on the VIX. As the VIX started to break out, we knew that would affect the market, and so that's why we're looking at that. So we have, let's see what else, another screen here on my other screen. So this is all still the same setup that I start my morning off. And I like to keep the daily time frame for SPY so I can see the very important levels on the 65. If we're coming into that 20-day moving average, we're likely to get a reaction off of it. And so we want to see this price action go down here. And then, again, if you have some short-term options on or large positions, you can shave some off going into that moving average because likely you're going to get some sort of reaction off of it, whether it's a day or two. I don't know. It could simply just get a reaction that day and then a gap down underneath it. There's many different scenarios, but so you don't want to take off all of your position if it gaps down below it and goes, but you do want to keep in mind that you might get a reaction off it. So if you're trading stock, it's probably not a huge deal. And you can set your stops higher, like above the 8 EMA, and since we're on the screen, technically we're in an uptrend still. We haven't broken down from that 8 EMA, but I do think we're getting a reversal cycle here. But that's, again, we hit that 8 EMA and we did get a reaction off of it today, and we're not broken down. So, hey, I put on a little bit of call protection and go from there. So I like to keep the moving averages. We have the 8 EMA for a trend indicator, nice and highlighted. 20-day simple moving average, 50-day simple moving average, and 200 simple moving average. Now, again, this is where we're going to look for this pullback to possibly test is that uptrend line It's not necessarily a trend line at this point. It's just a pivot from the October low and the October low. So you have 2 points. A trend is I consider a trend line where you have 3 or more points on there. And so, this could be a spot where it validates, price action comes into it, bounces off, and could break down from there. All right, SPX, just a different point of view. QQQ and NDX. So we have our ETF and our cash index on there. And there was one last thing on that 65-minute chart. I was also looking at this. I have a couple of indicators up here, but the reversal, our Williams percent on the 65. And so it's hard to be extremely bearish when this dropped so fast from being overbought to oversold on the Williams percent. And then the line crossed over the 80 line. So that's actually a buy signal. So it's hard to be extremely bearish. We had a nice move yesterday. We did well, and now we want to protect that money and continue our swing to the downside with protecting in the near term for tomorrow's catalyst. We'll see what happens with that. And that's all I really want to show you. We broke our major trend. I do think we had lower with a little consolidation with the inside day, the Harami. That Harami can be described since we already had that other screen up. Let's get back to it, and we can see what a Harami is. It's pretty clear here on QQQ. You have that nice big move, possible reversal, right? Then you have an inside day. Now this could reverse to the upside, and you have to get over that 410.47 all-time high right there, and that would be a bullish reversal. Or with the inside day breakdown from the lows here at 402.9, breakdown from there, and that's a follow-through confirmation that this was a reversal indicator, and we're reversing to the downside. So we have a Harami on QQQ and SPY. All right, that's all I got for you guys. Thanks for joining us here at Options Center. Don't forget to like the video, and we will talk to you tomorrow.